Yesterday, SEBI took a big decision on Finfluencers. In fact, this is something that they had proposed almost a year ago, but yesterday formal board approval was given for this proposal. So what is the proposal? It is to cut off all SEBI regulated entities like brokers, mutual funds, investment advisors, research analysts, etc. from unregulated entities like Finfluencers. So what was happening earlier was that a lot of brokers were giving what is called affiliate links to Finfluencers. They were putting them below their videos, and anyone who opened their broking account through these links, the Finfluencer was being given a cut of all the commissions that the broker got. This created a cycle of more videos, some of them clickbaity, some of them giving advice in return for commission income. Now, there are two exceptions that SEBI has carved out to this model. Number one, if somebody is only doing financial education and not giving any kind of advice, then that's okay. SEBI entities can still deal with them. So, what is education as opposed to advice? To give a very broad example, if you only tell your viewers what is P ratio or what is a stock market, that's okay, that's education. If you tell your viewers, should you buy HDFC Bank or not, that is advice. The second exception is about influencers who go through platforms. Now, SEBI has created this new structure of platforms who will check the content of influencers, and if they see that it's kosher, if the influencer is not giving any advice, then SEBI regulated entities like brokers, like mutual funds, can engage with influencers, can fund influencers through these platforms. This is the second exception that SEBI has carved out. Now, is this the end of the road for influencers and YouTubers with lakhs of views and raking in huge amounts of money? No. This only cuts off a part of their funding. The money that they will continue to make from RBI regulated entities like banks and NBFCs, that will continue. The money they make from insurance companies, that will continue. The money they make from selling courses, that too will continue. If you are an influencer, if you are a Finfluencer, life pretty much goes on, but in a slightly modified way. Now, some people on social media are worried, what if them as ordinary investors, as ordinary people, they put out some comments, tweets, etc. on stocks or funds or finance. My broad interpretation of this is that as long as you're not doing it as a business, if you're just sharing an opinion without any underlying aim to make money from it, that's okay, you can continue to do so. Yesterday's circular has no impact on you.